welcome.
Yeah, thank you, Stuart. Very happy to be here.
You are, in some ways, challenging the rest of the financial world to look at the way that you distribute wealth in this province and in this country differently. How come? Like, why is it important that financial institutions take on that responsibility? When
you think about the kind of society and the kind of community and the kind of economy we want to create, when you think about the allocation of capital, who gets money and who doesn't, it's probably one of the most powerful determinants of the future. If we give capital to a small business or a group of entrepreneurs locally, as opposed to allocating capital to a multinational that may just be coming here for a few years and moving on, it makes a profound difference to the quality of life and the future structure and viability of our communities. So we think banking is vitally important to communities and society, not just economies and finance.
So how does giving money to small firms equal that of supporting a large organization that may employ hundreds, if not thousands of people?
Well, we know that our economy, not only in the Lower Mainland, but right across the province, is dominated by small businesses and entrepreneurs. You know, businesses that employ really 5 people or less. And we know that those businesses, while small in size, are big in number, and they need a network of services and supports, just like a large company does. In many ways, more so. So they tend to be, because of their size, they tend to be a little more creative. They tend to reach out to different sectors. They tend to need support, though, in terms of coming together and marketing and finding the right partners and supply chains and things like that. But they create a lot of economic activity, and they create a lot of employment.
But small business is risky. So backing small business has got to be a risky undertaking for a financial institution. And is that not why typically they've said, yeah, good for you, Stu, but.
Yeah, I don't think it's, I think it's all your definition of risk, right, Stu? So if you're on the ground and you're connected and you see how local businesses are working and you know them, and you know who their customers are, you know who their employees are, you know who's supporting them, they're not risky. They're different. They're not a one-size-fits-all. They don't work well in a big-scale operation. So they tend to require, frankly, more time and connection on the part of the financial institution that's partnering with them. And so our experience has been that we don't have high losses from small businesses. And it's not because we have ridiculously strict credit. We're very responsible in that regard, but it's because we know them and they know us and we know the environment in which they operate. And it's just like anything in business. If you know those things, risk isn't about the fact it doesn't exist. Risk is about acknowledging that it exists and managing it. And so when we're connected to those communities and they know us and we know them, we tend to do better.
Well, I agree with you, but it hasn't been my experience in dealing with financial institutions. Generally, I'm just a number. Whereas with my suppliers, I can go to them and say, look, I'm a little squeezed this month. Can you give me an extra 30 days or so? And they go, fine. I'm not used to that kind of dialogue in a financial institution. And it sounds to me like you're saying that that's the kind of relationship that needs to exist.
It's not only the kind of relationship that needs to exist. I mean, banking is at its core, it's a relationship business. And so everything from the way that our members trust us and get to know us to the way we trust them. You know, the word credit actually comes from the Latin credos, which literally means I trust you. And so ours is a trust business. And so you establish trust just like you do in any relationship, through getting to know one another. So we in our branches have created unique spaces for small business to come together to talk about what their issues are. It's free. For places where we can partner them with a lawyer, an accountant, or a supplier that they might need so that they get that support and we get to know them and they get to know us.
Is that different than microfinancing? And if so, what exactly is microfinancing?
So microfinancing can take a couple of forms, but generally speaking, it's small credit for small, usually sole entrepreneurs that are starting out. It can also be, can take on some peer lending where we put groups of small entrepreneurs together to learn from one another as they build their business plans.
So you literally have a consulting service
Absolutely.
that you offer with the money that you're lending?
Absolutely, absolutely, because it creates the kind of knowledge and the kind of relationship that's key to growing those businesses and growing our relationship with us. So it's good for the businesses, it's good for us, and we think it's good for the economy and the community.
So microfinancing, who's eligible for that kind of financing?
Well, we find that there's a variety of people who apply for microfinancing. Some are new Canadians, right, and they're new to the market, and so they need some extra help in sort of starting out. Some are women entrepreneurs who are wanting to start their business. Some are small groups of not-for-profits that are wanting to experiment with social innovation and social enterprise. There's really quite a wide variety.
We live in a very expensive part of the world, especially with real estate values.
Absolutely.
People who have jobs, small business people, entrepreneurs who take out micro financing.
Yeah.
People want to own a home, but right now, how do we make that possible? And why is it important for you that people be able to achieve that ownership, realize that dream?
Well, you know, it's in many ways, my grandparents always said that the most important thing was to be able to own your house so that you had some independence and some security. Coming through the Depression as they did, that was definitely the norm. And I think that idea has carried through to modern times. But for many people, it's out of reach in the traditional sense. You know, we have this saying in our business that in our region, you sort of drive till you qualify. You know, you start in downtown Vancouver and then you drive south or east until you hit a price point, sometimes an hour and a half away by car or transit, where it's actually affordable. And in terms of quality of life and commuting and raising kids and being connected, it's very, very difficult. So we've been working a lot with cities, with planners, with co-op housing, with not-for-profits, and inside our own organization to try and look at housing affordability. Allocated almost $350 million in the last few years to supporting different kinds of housing arrangements that allow people a bit of equity and to get into the market, so that it's a form of saving, right? Particularly in this market, but in a way that's a little bit more creative through co-op ownership or by having an ability for two families to co-own one home, and so on.
We're talking about services that you are providing to people who are working or who have demonstrated that they have a commitment to working.
Yeah.
But not everybody who is in need is in that position, or they have temporary or intermittent employment or residency, making it very difficult for them to deal with financial institutions.
Yeah.
As a result, they fall prey to people who prey on them.
Yeah.
Is there anything that you can do for them?
Yeah. So that one was really confounding us for many years. You know, we have many branches, VanCity branches in our community throughout the Lower Mainland and in Victoria, and we're seeing and hearing from our staff that they were seeing payday lenders crop up almost right across the street from all of our branches. And
across the street?
Across the street. We could see that even in our own membership, which we take pride in serving all people, we could see that about 12% of our members were actually using payday lenders. And to be
12%?
Yeah, to be quite honest, that was a shock to us and not a pleasant one. And so we thought, we got to do something about this. So we developed a program called Fair and Fast, which tries to replicate what payday lenders do, except for at a far lower rate, with more transparency and providing credit counseling and consolidation all in one. So we've written about 900 of these loans now in the last year, and we charge an interest rate that's about the same as you'd get if you could get, you know, a gold credit card, but still it's not a low rate, right? It's in the teens, but it's still much, much lower than what you'd get from a payday lender, which could be sometimes 400 and 600%. And so we provided these small dollar credits to our members and now to the broader community. And we calculated that over a year, if they had just done the average of what a payday lender would charge them, we've saved them almost $1 million in savings. So for people who are borrowing $1,500 or $1,700 at a time or $500 at a time, that's a huge amount of money. So it shows you why we have payday lenders in our community, because they're making a lot of money. But it also shows that we as financial institutions have done a very poor job really understanding this market, and there's absolutely a way that we can serve it in a way that's beneficial for us and beneficial for them.
You know, I can hear people who are maybe on coming at life from a different perspective, saying, well, hang on a second, you know, the marketplace looks after that and it does it perfectly well. Why do you think that it's the responsibility of a financial institution to step in there and do this kind of thing? Isn't that kind of the role of government to a certain extent?
Well, we're not doing it, we're not a not-for-profit, so we're still able to make the needed return on that. It's just not egregious. You know, it's a sustainable return, just like we make on mortgages or small business loans or anything else. And so I think there's just been a tendency not to understand this market, not understand the fact that it's a short-term need that may be tied to employment and may not. And so we took the time to understand that, and I think other financial institutions can too, and it's providing credit. It is a role that a financial institution should provide.
I think that there's a couple other components in helping people to get ahead, especially if they're looking at the support of their own family. One would be in affordable and appropriate childcare. And the second is in helping to support advancement in secondary, post-secondary education, which is an issue that, you know, I look at and I go, okay, the cost of sending my daughter to university is high.
Very.
I'm having trouble making ends meet now. Do you see your reach extending into those areas as well?
Well, again, you know, back to my opening thought about how important the allocation of capital is to our future. It can happen. It doesn't have to be big chunks of money. It happens in small ways as well. So we have a program at the moment focusing on that very issue. So we know that the RESP vehicle that the government set up to try and incent parents to save for their kids' education in the future, and they put matching dollars in, you know, free dollars if you like, saved one for one. That we know that the chances are, if you have a kid has an RESP, the chances of them using it for post-secondary education is like 5 times as high in terms of going to post-secondary as if they don't have it. And we can see many families who are educated and spend the time to research that are putting those kinds of savings and have the means to do it. But many families aren't. And they're leaving, frankly, money on the table. So we're partnering with a foundation that was started by a banker, actually, in Toronto, the Omega Foundation, to go out into community and to start to educate parents who might be new Canadians or might not think that they could ever save enough or might not have the financial literacy confidence to participate, to understand these programs, bring them to the credit union so we can help advise them. And so we have a target of being able to increase the coverage of RESPs in our community by 50%. And we think that's a real endowment for the future. It's just small money matched over time, allowing people to save.
So when you take a look at the current landscape of how we as a society are doing in supporting people in need, genuine need, and that are slightly disenfranchised from the system, how are we doing versus what your vision is, and how long do you think it'll take you to get there?
So we're not doing enough. There's no doubt. There's no doubt about that. But there's creativity, and there's people doing more and more all the time. And to the point about it being, you know, just like most big businesses that we know of that are successful, Apple being the one that's talked about, especially with the Apple Watch coming today, most often, you know, those didn't start as big corporations. Those ideas didn't come from big, as we know, they started literally in someone's garage. They were a small business. And we have many, you know, we have 9,000 tech companies and small entrepreneurs in our community working in the equivalent of their garage or the basement of a heritage building, trying to think about not only how to build their business, but how to build their business in a way that strengthens the future for their kids, for their grandkids, and for the community. And so there's all sorts of innovation happening on the ground, but business has a bigger role to play in supporting those companies, in thinking about how their own business can, for example, we talk about labor market shortages, you know, the fact that we're all getting older. And most of our economic growth in this province has actually come because we've had a demographic increase, right? And we've had population growth that supported our resource sector. That's where most of our growth for the past century has come from. If you look at the data, that's going to decline. Not to mention the carbon implications of that. So where are those workers going to come from? Well, we have a growing population in our Indigenous communities, you know, completely disenfranchised. Our businesses reaching out and understanding that community. We have people with disabilities who are ready, willing, and able to work. But we have a bias sometimes about what accommodation means and what it means to bring those employees into our workforce. All of those things are not only good for business, they're good for communities, they're good obviously for those employees, and they're good for the economy. And so I think we have a real challenge as business leaders to be a bit more creative about how we run our business in the interest not only of our business long term, but of our communities.
You just touched on a point that's really important to me, and that is about how do we reach out into Indigenous communities and help present generations and future generations realize what is the dream of this blessed nation that most of us call Canada, but many people in those communities don't feel that way. Can you play a role there? How can you help? Because I think we collectively have to come together to do something to change that situation.
Yeah. You know, we had an opportunity as an organization to participate with Reconciliation Canada in really trying to use the understanding of the residential school system and what it did to our country and as a country, frankly, and also obviously to Indigenous communities in our country, and say, so this is a time of joining together and moving forward. And we partnered with Reconciliation Canada, and it was an interesting experience for our organization, for our employees, many of whom had grown up in Vancouver, and so didn't have a lot of contact, frankly, with Indigenous communities. So I think there's a level of awareness at the individual level that we need to work on, and at a level of connection. But in addition to that, we certainly have been reaching out to Aboriginal communities. We've just announced that we're opening our first branch outside of an urban area in Alert Bay on the coast to start to get some greater participation in community and greater support. We see with our resource companies, of course, that they're now paying attention to Aboriginal communities and Aboriginal employment. But there's so much more we need to do. In
those communities, I know that there may be emerging opportunities for them in working with resource companies, but they still need to have the expertise and they need to have access to capital to be able to come forward with the appropriate equipment, training, personnel, systems and so on that make them eligible to be able to realize fully what that opportunity is, not just taking some portion of the revenue. That's and right. I think that is going to be like access to prosperity, which is really, I guess, what you're talking about throughout, is solves so many of each person's challenges. Absolutely. It's interesting. You know, when we talk about economic growth, again, similar to the models maybe that you learned in school that you referenced earlier, but it was always, well, we have to focus on GDP and we have to focus on productivity and output. But if you think about it, the way to prosperity is to have more people participating in the economy, not fewer. And so the way that it's gone is with technology and with consolidation and with growth of corporations, they employ fewer and fewer people. Mm-hmm. And so back to your point about small business, entrepreneurship, connecting with parts of the employment base that aren't
as engaged or that we need to get more active. All of that is about increasing the participation in the economy, and good things come when people get active in the economy. They learn stuff, they get confidence, they build relationships, they build wealth in all senses of that word. So we really are about making sure that we're doing everything we can in our little way in this corner of, of the world to get more people participating in the economy, which will be better for them. And it'll be better for us.
So if that's your business strategy and you target that market as an opportunity, why are you so public about sharing this? Why are you encouraging others to do the same?
Why wouldn't we be? Why wouldn't we want greater prosperity for more people to participate? And unfortunately, the other side of it is it would be great if this wasn't a differentiator for us in terms of our economy and our community. But as a business leader, I'm not that worried about it being copied, because I still see that we have a long way to go before business leaders have the confidence to be able to run their businesses this way. So in the short term, unfortunately, we're not losing a lot to competitors who continue to look at parts of what we do or tell us how you give back to the community, but are less curious, frankly, Stuart, not about what we do with the money we earn, but how we earn it in the first place, how we limit our risk, how we're able to serve small businesses, how we're able to reach out and hire people with disabilities at faster levels than others. Their curiosity there isn't quite what it could be.
Well, as somebody who's been bouncing along the edges of all of these institutions and running a small business for a little over 15 years now, I'm thankful to hear you moving in this direction, because I really didn't believe that anybody saw this as being like a good way to go. But I, my own self-interest at work here, I agree. I think that, here we are, we're providing employment, we're providing opportunity and legitimate services that everybody can benefit from.
Absolutely, and it is the source. When you think about it, young people today will have 7, 8, 9 different careers potentially, let alone different jobs. We don't even talk about jobs anymore, we talk about livelihoods. And so creating an economy that's capable and a workforce that's capable of starting a business, growing, helping it thrive, partnering with others is going to be an essential skill in the future.
Thank you very much. I really appreciate you doing this.
Thanks very much.